views and opinions expressed in this program are those of the participants and do not necessarily reflect the views of BronxNet or the program underwriters.
President Donald Trump's $1.5 trillion tax overhaul in 2017 was one of the biggest legislative wins he's taken since office. It's being hailed as the biggest tax relief for individuals and corporations in 30 years, but critics say it's just tax relief for the rich and the wealthy. However, proponents say 80% of taxpayers will see some relief. Now, coming up on this edition of Perspectives, Y2K Credit Solutions joins us, helping to explain and understand some key things to keep in mind as we try to figure out how and this particular tax thing will affect you. Stay with us. Perspectives is coming up right now.
Let them know. What's on your mind? What's on your mind? Let them know. Anything relevant to life, you bring it to the table. Whether you make a move solo or a movement with a stable. No fables, you speak on your decisions. Cause in the long run, it's your voice, your views, your vision. Keeping it real with many messages for you to know. This ain't radio, but DJ runs the show. Entertainment, he rocks it. Politics, he locks it. The host with the most would handle any topic. Don't forget to share your perspective which shines a light. Cause it might make a difference in someone else's life.
Make a difference.
What's your perspective?
Express what's in your heart and your mind. Share your perspective.
What's your perspective?
And hello, everyone. Welcome to another edition of Perspectives. I am Daren Jaime, and of course, we thank you for watching, and we invite you every week to join us here on Bronx's Channel 67, where we share on perspectives. Listen, if you want to find out more, you can also go to our social networking sites, Facebook, Twitter, my professional page, Daren C. Jaime, and you can find out the latest that's happening, share your perspective, and listen, it might just make it to the air. Well, the most significant tax cuts should go to the middle class. This is according to the White House, because they're more likely to spend every dollar they get. Now, the wealthy use tax cuts to save or invest. But with all of President Trump's tax bill signed into law last December, the question is, what does it all mean for you, the average Bronxite and New York City residents? Joining us now to help answer some of the questions, give us insight on some of this tax reform of what President Trump has done, is the president and CEO of Y2K Credit Solutions, and we're pleased to be joined by Andy Sukhu. And Andy, good to have you.
Darren, thank you for having me. Good morning.
Good morning. Good. How's it going?
Can't complain, man. This topic is very touchy these days, you know. So we
It
got a lot
is.
to talk about.
Yeah.
It's very construed. A lot of people not really understanding what's going on with it. A lot of people don't think it's going to benefit them, but I think it's going to be a great topic, and look forward to drilling into it with you.
Yeah, well, let's delve right into it. You know, the president came out with his tax plan. A lot of people
Right.
say, listen, it's going to be some short-term relief and some short-term benefits, but really, let's break it down. What exactly is going to happen here? Because $3.1 trillion in budget savings is what's being said.
Yeah, that's pretty big. It's the biggest of all, actually. But how it's going to affect you for 2018 and 19, there are going to be a lot of changes in the food stamps. Now, there's going to be limitation on the vouchers of what consumers can choose to buy. That's one change. There's a change in Section 8 homes. There's a limitation on how much they're going to be covering for Section 8 now. The biggest one of all is the student loan forgiveness program. People that are in the public services, you're not going to be able to write off all your student loans anymore. What's going to happen is that if you have an undergrad, for 15 years, you're going to pay 12.5% of your income for 15 years. The rest of the loan is going to be forgiven. For your master's, it's for 30 years. Mm-hmm. So there's going to be a lot of changes. There's going to be a lot of changes this benefits more business owners. For the consumers, it's only a 10-year stretch you're going to get to enjoy it for. You're going to be paying it back in 2026. So what's going to happen in 2026 is going to revert back to 2017. And taxes are going to go up slowly.
So short-term gain, long-term pain.
Absolutely. And the interesting about it, our kids are going to be paying for this in the future. But it is a short-term for consumers, but for businesses, it's long-term permanent changes.
So when we look at that, let's talk about income tax, because a lot of people are concerned about income tax, whether I'm going to get more money back in my taxes, whether I'm losing money on my taxes. So when we look at the tax plan in regards to us here in New York, because New York and California, explain to our viewers, are probably the more hardly hit out of all in the United States.
Absolutely. These are two biggest cities. A lot of businesses conducting these two states. But for the employees, what you're going to see in your tax return, you're really not going to see that much change. For example, if you, let's say in the stretch of a year, it's $1,000 you get back, really only like $40 a pay week. The way you really, and your payroll is not really the way to gauge it, to see if you're going to get money back or if your taxes going up or going down. The real way to gauge it is that if you have investments, properties, stocks, that's where you're going to see if your taxes are going up or going down. But you are going to see some savings. You're going to be able to. It's kind of interesting because for someone that claims single, the cutoff is $6,000. Now you can claim $12,000. For someone that's married, it's $24,000. So it goes up for that stretch. You'll get a lot more money back in the end of the year. But in the payroll, you're not going to see a big increase in your pay. $40, $30 the most. But the only way to see it, again, is if you have investment properties, if you have other investments that changes your tax bracket.
So let's talk about this for a second. I was looking at some of the income tax rates, and I was looking at how things are changing and how things are actually, well, you know, some are going to stay the same in 2017, and you look at 2018 to 2025. There is some significant difference.
Well, absolutely. For single, for 2018, 2025, in that stretch, you'll be able to claim $9,000 for a single person. For married, you're going to get $19,000 back in a break in your tax returns. But again, that's only for a short period. So you're gaining it on the front end, but in the long end, you're actually going to pay it back, and your tax is going to slowly go up after 2026. It's actually going to end up doubling in the long run. So there are some short-term gains.
Right.
Long-term gains are not there for consumers.
You break down a little bit about this thing called personal exemptions, and because personal exemptions for people, we're not going to be able to claim some of the stuff that we used to claim.
Absolutely, and that's one of the biggest one also because, for example, if you're moving, you can't claim your moving expense. You can't claim dry cleaning. A lot of things you can't claim, and that you actually claim your taxes a write-off right now. Itemized deductions. You can't claim, like, car payments, like if you're traveling for sales, the miles, there's going to be a cap limited in all those things that you can claim. For kids, if you have one child, you get the $4,000 credit. However, if you have more than one kid in your household, you might not have been able to claim it. You actually might be paying more taxes because of how big your household is and your income is. So the itemized deductions are very varies, but the main ones are the kids, your family, the family size, and what you itemize as far as your work-related things.
So looking at it from the perspective of right now, who benefits the most?
If you want my honest opinion, it's going to be business owners, small business owners in the long term. You know, the business tax cut went from 39% to 21%. A couple of things are going to happen there. One, we can it enhances business to hire more people, so you stimulate the economy, more people are going to spend and so forth. But it's long term, it's the business owners that are going to be benefiting, not the short term, not the consumers.
And so when we talk about some of the changes.
One thing I want to add also, for housing, you can only claim up to $750,000 on your mortgage now, interest payments. If you have a line of credit, you can't claim the interest on that anymore. That's cut out. Prior to 2018, you could have claimed that. So, you know, it's gonna cause a bubble now because people are paying high taxes on their house, $18,000, only $10,000 you can claim. The rest you can't. So what's gonna happen? People aren't gonna be able to afford the houses. The market's gonna bubble. Everything's gonna come back down, which is a good thing because the housing market is very high right now, and it's very limited inventory. So everything's gonna come right back down.
All right. Andy Sukhu is our guest here from Y2K Credit Solutions, breaking down the latest that we've got with the president's tax plan. How exactly does it affect you? Coming up, we're going to talk about some more of the president's tax plan. We've got the budget that's getting ready to come out and be released, the taxes, a lot that's going to affect you, bottom line, and we'll break that down with you. So stay with us here on Perspectives. We're coming back with more right after this.
And I can't change, even if I tried, even if I wanted to. My love, she keeps me warm. 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 She keeps me warm.
We are neighbors and best friends. I love my sister.
My heart doesn't see race. Love is love.
Our family is no less than any other family.
Love is kind, love is patient.
Well, we're back here on Perspectives, breaking down the president's tax plan. The plan was voted on in December, but still a lot of questions. What does it all mean? How does it affect you? And what is really the bottom line in your pocket? So Andy Sukhu from Y2K Credit Solutions is here sharing a little bit about that and letting us know. And so let's talk about this as we move into the W-4.
Gotcha.
There's a lot of questions about the W-4. And, what changes are going to have to be made in the W-4 in order for a person to get their benefits now?
Well, you're not really going to make any changes in your W-4. Again, like I said, it's a very small change you're going to see in your payroll, if any at all. If you if you get $1,000 a year back, it's probably $40 pay period you're going to get back. However, to really see a big change is the household, and this is going to happen at the end of the year to see whether your tax go up or go down. It's really the household size. And if you have investment properties, if you have stocks, bonds, whatever you have invested outside, that's where you're really going to see the changes in your taxes. So I don't think consumers should really go ham.
Right.
Should go
Ham, right.
ham on. I'm going to see a lot of changes in my payroll. It's not going to be that much. It's very minimal, very minimal,
Very
if
minimal.
any at all.
Okay. And so let's talk about pros, cons, because as we talked about, this plan is still being worked out in terms of what's going to happen. But,
Correct.
they're very much clouds, controversy, but at the same time, there are some pros and cons.
Well, yeah. So for one, for the business tax, it cut from 39% to 21%. That's a huge saving for business owners. You can take that money, reinvest it back into your employees. You could reinvest it into new employees. You could hire, do a lot of things with that savings. The second thing is that the tax breaks. The business owners are going to get a lot of tax breaks moving forward. The cons, and the second thing about it is that this might get the growth to be a popular plan. Who knows? Lawmakers are still trying to figure it out how this is going to work. If it does work the way it's supposed to work, it might grow to be a very popular plan. It could also grow to raise the deficit. We're already at a high deficit right now, and this is just going to add on to it. The second con is the stock market. The stock market is also going to go up. You're going to be able to invest. So those are a little bit of pros about that.
You're saying the stock market, you're going to be able to invest, but what we've seen is the Dow Jones at record lows.
When it's low, you can go in a little bit, right?
Right.
But that's all going to be determined. I say we give it about 6 months, and then you're going to see exactly where this law is going to go, where it's going to place.
So the stock market is there too. And so you said, as far as the bill, it could possibly get popularity over the course of time.
Absolutely. But it could also be a bad thing, and the deficit goes way out of control. Also, the second con about this is that in long term, you are going to see a raise in your taxes. It is going to go up after 2026. Wow. Slowly, it's going to go back up. And it's going to be higher than when it was in 2017. So that's a very big con, and you got to be careful with that because, again, your kids are going to be paying for this in the future, not us. It's the new generation that's going to be paying for it.
Right. Well, when we talk about small business, I mean, you said that they're probably going to be the biggest beneficiaries
Correct.
of this whole plan. So give us a little bit about how small business is going to play out, or how this is going to play out in the lives of small business owners.
Well, we get to the small businesses, you get to write off a little more than what you're not able to now, right? But being such a small tax bracket now, we haven't had this until 1939. That's when the lowest was. and then it rise. So we're going to take that, or business owners can take that and just reinvest it back into the company. They're going to also, the thing is with businesses, you can get a write-off, but it's not going to be a lot of write-offs also. It's very capped for us also. The biggest savings is just the tax bracket coming down for us. So we're gaining in the tax bracket, but also we can't claim as much as we can anymore. It's being cut.
In the area of exemption.
So you can't. It's not going to be a win-win situation also. But the bigger picture is it's from 39% to 21% now. But again, we're still going to be not able to claim a lot of things.
So the tax cut lasts until 2025 for business owners.
No, for business owners, it's permanent.
Okay.
For individual people, for working class people, it's up to 2025.
Okay.
So it's very short, which is interesting too, because how is that? How is the businesses stay for long term, but consumers are only short term? It's kind of interesting.
We touched on a little bit before about investments, though, and how this is really going to play out with investments. So it's going to be a time for people to be able to get in?
Well, not exactly, because that's a good point you brought up, too, because now that the market's coming down, the housing is going to come down also. The tax laws are savings. People that own houses that have these high taxes won't be able to pay it anymore. They can't write it off anymore. You know, lines of credit, you can't write off the interest no more. People look for those things. So what's going to happen? The banks are not going to get, people are not going to take money from the banks anymore. You can't sell these houses because no one wants to pay these taxes. So everything's going to have to come back down. So there's going to be a time when you're going to be able to invest, and you know, you should have everything, all your assets together, so you can try to take opportunity and invest.
When you give it like a time frame for how long do you think this is before with this window here?
I say this window is going to happen somewhere in July of this year, towards February next year. And that's when it's started to come down already. I'm in the real estate market myself, and you're seeing it now, especially in Long Island. People are trying to come back this way to Queens because the tax is a little cheaper. But a lot of people are not going to realize it until they file 2018 tax in 19. That's when a lot of the change is going to happen. That's when the bubble is going to explode.
I want you to stay connected to us here on Perspectives, bring you information about the tax and the tax bill that was passed into law last December by lawmakers. The president very happy about the tax plan, calling it a win for him and the Republican Party. We're breaking down right here on Perspectives what exactly all of this actually means. Andy Sukhu, our guest from Y2K Credit Solutions, in the studio. Stay with us. We got more coming up after this. We'll talk a little bit more with Andy, and we'll break down some more of these numbers.
Well, Thomas, you've got pre-diabetes. But with more exercise and a change in diet, it can be reversed.
I've tried exercising. It just makes me hungry for bacon.
I love bacon, too. And who really likes to exercise?
Not me.
Me neither.
Nobody. So we're good?
What? Oh, you still have pre-diabetes. Big time.
So, I'm kind of new here, but I've noticed a trend. My human does this funny thing where she goes around and gets all my toys, and then she hides them in that basket by the door. You know, but it's always the same basket, and it's always in the same place. And then she acts so surprised when I find them, but, you know, she's putting them in the same basket again. It's like, hello, that's where you put it last time. You were the worst at hide and go seek.
Behold the angry giant. Behold the angry giant. Behold the angry giant. Behold the angry giant.
It only takes a moment to make a moment. Take time to be a dad today.
Our guest in the studio, Andy Sukhu, CEO of Y2K Credit Solutions, breaking down the Trump tax bill, and that's pretty much what it's called. Lawmakers voted that in, the tax plan, and actually how that all affects. And as we talked about how it affects investments, we talked about how it's going to affect small business owners. The one thing that you got to ask is, how does it affect your credit? And I think we didn't talk about that at all.
Actually, we haven't touched, not for this year, but it is going to affect you. If you remember last year, the housing market skyrocketed. For 6 months, houses that were worth $300,000 were selling at $500,000, $600,000. So now, with this tax law in place, people aren't going to be able to pay for these mortgages. They're going to want to sell their houses. They don't want to keep it anymore, which means the market is going to come back down. The mortgage rates are going to come back down. So if you have all your, for lack of a word, ducks in line, this can be a very good move for you as an investor for you. You can actually capitalize on this and get a house with equity. You can buy some with equity, because when the market comes down and your credit's good to go, which is credit is number one in order to get a mortgage now, the rates are going to come back down. You can be able to pick up something with some equity in it.
And that's the main thing. If you're buying a home, you want to be able to get some home and also have some money in the home.
Well, absolutely, because when you own a home, that's asset. That's owning your first home can open a lot of doors for you. I always tell, I'm a firm believer in this, and I tell a lot of clients, to make it in this country, it's good credit in your first home. You got good credit in your first home. You can keep taking lines of credit out on the home. So imagine you buy a house with equity in it now. Take 20% equity out, you buy another home. You time the market right, when everything is coming down, you go in for the kill, right? So it can be a good thing for investors as long as you have your priorities and your ducks in a row when the market crashes, which is your down payment, your credit, the mortgage rates are going to come back down. Just buy something, pick something up.
And it'll be a good time. Credit repair, obviously. Do you think during this season, with the way the numbers are looking and things are looking, that a lot of people be looking your direction?
Oh, absolutely. Within the last year, we're increasing about 39% in clients all over the U.S. Credit is heavily used now. Dating sites are using it. It's so funny. eHarmony has a thing on there, a little patch with your credit score, a little box. But anyway, credit score is driving everything these days. The interest rates, you have a 620 credit score, your interest rate's 5-something, 5.25. Who wants to pay that? In 6 months, you're not going to be able to pay for that mortgage. You're going to get frustrated because 90% of the money is going towards interest. So, clients are trying to get their credit fixed now, and plus with the new tax laws and the new judgments, they're freezing your tax returns. So if you have a judgment out there, you might not see your tax return. So we've seen an increase in clientele, and we've turned around a lot of clients within the last year, 700, 750 credit score. But to answer your question, yeah, it's now is the time. This is the time to get all your financials in order.
And we're in the first quarter of a new year. What should people really be focusing in on at this juncture with the new year upon us?
As far as financials, we don't know where this tax law is going to go. It's going to be revisited for 6 months again. And again, the consumers are not going to be saving, but some consumers may be paying more because of their household. So you want to try to save as much as you can. Keep everything to a minimum expense. Don't go spending, outside of your means. Try to keep everything at a budget right now because you don't know what's going to happen in 6 months. And you want to make sure that you have a cushion in case something happens. There's a lot of rezonings going on over here. So, to rent now, renters and landlords are asking 3 months. So you want to keep as much money in your pockets and in your bank account, correct.
As we get down to the end of the show, tell us a little bit about Y2K Credit Solutions and how people could, possibly tap in.
We're actually hit 12 years in the industry. I'm very happy about that. We have a few good endorsements now, but we're a full debt and credit restoration company in all 50 states. We fix anything from judgments to whatever you have on your credit within 3 to 5 months. And if you want to reach out to us, it's y2kcreditsolutions.com. 516-568-4541, and we're here to help you. We do a lot of, actually I'm doing a speaking engagement at Rikers Island.
Is that right?
Very interesting.
Okay.
Yeah, I don't know how that's going to work, but it's interesting, so I'm excited about that.
So what's going to happen to Rikers?
They're going to close it down, but it's going to take a while, man.
Right.
That's like another 10 years for them to close it down. It's a big institution. It's not going to just overnight.
Right.
But correction officers, they all have issues, financial issues, and they want to. No one wants to rent anymore. Everyone wants to own. Plus, New York is becoming so expensive now, so everyone is trying to get as much knowledge as they can,
right,
and do things the right way now. It's not about the show. It's not the debt. It's debt elimination, asset accumulation. That's what it's about now. And so I'll be doing a speaking engagement there in a couple of weeks. I'm excited about that because it's huge.
Yeah. We encourage people, if you want to find out more about it and find out more about the tax plan, this is what you do. You can stay connected to us here at Perspectives. We'll break that down. We've got Andy here this week. We've got some other people coming down the line to be able to help us to see how this is going to play out for us here in the borough of the Bronx, New York City. As we said, New York State and California, the two largest states.
Yes.
And so we're the ones that are going to be adversely affected, as well as Texas.
Yes, Texas also. Florida also. I think Florida is going to be affected by it also. But I guess we have to wait to see what happens.
Right.
This just passed a couple weeks ago, a month ago. And lawmakers are not even sure how it's going to work. And they're up in the air with it also. So let's see what happens.
Well, that's what I'll bring back. And keep
Thank
on
you.
sharing with us and letting us know. Andy Sukhu.
Thanks for having me.
Thank you so much for coming and sharing with us. And he's the president and CEO of Y2K Credit Solutions. And that about wraps it up for this edition of Perspectives. Listen, we want you to stay connected to us, find out more about us here on BronxNet every week, Channel 67. Also, check us out on our social networking sites. And there you can find out all the additional stuff that's going on. For all of us here on the set, we want to say thank you for watching. Stay safe. Share your perspective with somebody else you just don't know. It might make a difference in somebody else's life. Take care and God bless. Daren Jaime saying, see you later.
Perspective which shines a light, because it might make a difference in someone else's life. What's your perspective?
Express what's in your heart and your mind. Share your perspective.
What's your perspective? Let them know.
What's on your mind?
Let 'em know.
Express what's on your mind. What's on your mind?
Let 'em know. Anything relevant to life, you bring it to the table. Whether you make it move solo.
How can I help my daughter with her reading?
Searching for help with Dachshund reading.
No.
Let me try. Sarah's bright, but when she's reading, she has trouble sounding out words.
Playing world music.
What?
I give up.
Wait, I was trying to show you how Sarah feels every day. Frustrating, isn't it? Redirecting to understood.org.
Join parents and experts at understood.org, a free online resource about learning and attention issues to help your child thrive.